Hey everyone, this is Ryan Mallory for SharePlanner.com. I try to do these about 3 or 4 times a week, and that hasn't really been the case this week. I'll get to that in a second, but first of all, I just wanted to talk about the S&P 500, what it's doing today. The problems that we're seeing in the market right now. Of course, a lot of it has to do with this looming government shutdown that's going to take place at Monday at midnight if Democrats and Republicans, and there you can insert your jokes about the political parties. Um, if they fail to come together and pass a budget, because I don't even think we've really done a budget in like 5 years. I think we just continue to do a continuing resolution each year, which is garbage. Get some guts and pass a budget. I mean, doesn't make sense that we could continue to spend what we do, and we just, instead of actually budgeting a plan to reduce spending, we just say, we're just going to continue spending at previous year's levels. I mean, that just seems asinine to me, quite honestly. But that's what we do, and I can't really fault Congress for it when it's us, we the people of the United States, that keep re-electing these morons to office. I mean, there's a lot of people in Congress that have been, 90 something percent of them have been just re-elected year after year after year after year after year. There's very few freshmen that come into the House and Senate each year. The Ted Cruz out of Texas, say what you want about him. I know there's people that disagree with what he's doing because they disagree with the idea of a government shutdown. For me personally, I say to myself, what do I gain by the government being open? I don't believe, and I could be wrong on this, but I don't believe that they're going to stop supporting our troops in the field and making sure that they're taken care of in that regard. It's not like, in fact, I'm quite certain that people in harm's way, troops and so forth, their operations don't start, or they don't stop. They might stop getting paid, which I would be completely open to saying, okay, we're going to make sure that the troops are taken care of. But I can guarantee you that while you might have a Republican to say, okay, let's pass a bill that says that in case of a government shutdown, the troops are taken care of, but the Democrats won't give up that leverage. So in any case, I guess my point, without getting too sidetracked, is what do I really gain by the government being open? And the fact of the matter is, I gain nothing. All the government has turned into is just taking the money that I make and giving it to somebody who's not willing to do anything for themselves. And that's the it's a bureaucratic Robin Hood. Steal from those who are able to provide for it. And I'm not going to use the word rich, because it's not stealing from the rich. It is stealing from people who have something and taking it and giving it to somebody who's not willing to provide for themselves. And that's the frustrating aspect of our society today. All right, I don't want to get too sidetracked on that, because when it comes to politics, I have a tendency I can get sidetracked really easily. I'll just leave it at that. So let's look at the S&P here. So we're talking about this 5 days worth of pure selling on the markets, and this is right after we made this huge high, on all-time high on the off of the FOMC statement from last Wednesday, and we have not had a single update since then in the S&P. And today it doesn't look like we're going to do it either. So you see these Bollinger Bands here. The sell-off happens right when we get overextended Bollinger Bands. That's why I'm always cautious. And I know people don't always believe this, but I do think that there's oftentimes news events and everything else that somehow corresponds with these Bollinger Bands, to where, the fear starts kicking in when we're way overextended outside the upper Bollinger Band. Then people start thinking about this government shutdown and what it might mean for the markets, and the uncertainty of not funding our debt priorities, and so on and so forth. And that's what you have today: 3, 4, 5 straight days, and today looks like it could be another day in the red. I would not put it past this market to finish again in the red. I think when you start getting into 3 or 5, 6, 7 days in the red, you're creating for the opportunity for a big bounce. Right here you had 4 straight days lower, and you had a minor bounce, but a bounce that eventually gave you about 1646 all the way up to 1669 before it finally came back some. We haven't really seen this much in terms of down days. We've seen a lot of days where the market has finished up, and let's get rid of these Bollinger Bands because I'm pretty much done with them for the purposes of this video. But you haven't seen a lot of like 5 straight down days. In fact, have we even seen it yet this year? Okay, we have. No, we haven't. We ended December with 5 straight down. 1, 2, 3, 4, 5, and they weren't even that much in terms of heavy selling. 1444 down to 1403. So it was more than what we've seen so far in this current market environment. But look at the pop that we had in the beginning of January. That was the last time I believe we've seen 5 straight down days. And but that being the case, you can see that it doesn't happen much, A, and B, when it does happen, it often leads to a significant pop in the markets. So I think we may be actually turning the corner here on the market, where from what we've seen January through September of this market being constantly buying the dips and pushing higher, I do think we could actually see a scenario play out where the markets push decisively lower for the first time in a long time. Maybe we go from 1694 and we break below 1630. That would be a game changer for this market, because we have been on this trend line on the S&P off of the November lows the entire time. So we have not really dipped below. We came close to it in August and in early September, but we sort of just hugged that line. We dipped a little bit below it, but we hugged it, and then finally we regained our footing and pushed higher. But if we could, it's a completely different market if we start dropping below 1630 here and create a significant lower low in that regard. I don't think, honest opinion, I think the market has been much, since we hit those May highs, the market has been much more tumultuous per se. I mean, you had this huge sell-off in late May, in all of June, for a little bit of July, and then we bounced higher, and then we had to pull back again in August too. We've just really, it hasn't been as sure of footing as we saw in the beginning of the year. We've just been give and take, 2 steps forward, 1.9 steps backwards. And though we reached new highs in September, they're not being made with like an aggressive authority where you just see the buyers constantly buying the dip, and wanting to push this market higher and higher and higher. That's just not the case. We're actually having a really good September in the splash zone with our trades. Probably I think it's the best month of the year so far for us. Could be wrong on that. I'd have to see what it looks like once September finishes out. But it's been a really good month, and I can't hang my head on that by no means. And by the way, I had mentioned earlier I wanted to do more of these videos. This week, I think this is only the first one that I've done, I think. Yeah. Monday, get this, I did a video, and I posted it for a short moment, and then I realized there's no sound in this video. And I had recorded the whole video without my microphone being on. So usually check for those things. I didn't check for it that time, and it stunk because I thought I actually put together a pretty darn good video. So the only person that got to hear it was me, because the only one who does these things, I'm the only person present when I'm creating these videos. And then we had a little bit of a scare this week. We went to the hospital for my son. So that took a little bit out of me. Late nights, my son's been puking each night and upheaving, and thought he might have appendicitis. Turns out, not really the case. He just a little stopped up. So that was a huge answer to prayer, a blessing from God that it wasn't more serious than what it was. I mean, it really, that was the best case scenario for them to just say, hey, get him go into the bathroom a little bit more, he'll be fine. And we have, and he's been doing better. So some worries, some screw ups on my end from a technical standpoint with me doing these broadcasts with a muted microphone, and that's why you had me just doing this for the first time this week. Let's look at a couple more things here. VIX. I want to look at the VIX. And we're going to have a stocking VIX website. You've seen a whole bunch of these stocking websites that I've been putting up there. Maybe today, but no later at the end of this week, we'll have stockingvix.com. STOCKINGVIX, V as in Victor, .com. And then with that video, you'll have all the news that are out there based on the VIX indicator. So if you're trying to find out something going on with the VIX, you'll be able to find it. So the reason why I wanted to bring up the VIX chart, though, to begin with, let's look at this 5-minute chart. You'll notice you got like a pretty significant inverse head and shoulders here. Okay, chart here on the bottom left-hand corner, you get the head, or I'm sorry, the left shoulder, the head, and then the right shoulder. Now remember, these are all inverted because it's an inverted head and shoulders. Now the question becomes, can you really do technical analysis on the VIX? I tend to think that you can do technical analysis on anything, but then when you're doing technical analysis on something that represents the that is dependent on the action of something else, like the VIX, for instance, tends to only go up when the market goes down and vice versa, and so it's semi-dependent on the S&P. That's why when you get the VIX going up when the market's going up is oftentimes a good bearish indicator. In a sense, it's like doing technical analysis on the stochastics, right? You don't ever see me saying, oh, look at this here, you got a double top on the stochastics, because this is really just dependent on the VIX chart here. And so if I'm going to do technical analysis, I'm better off doing it on the VIX itself rather than doing it on a subset of the VIX. But the VIX has some independence to it, and I think that you can do a little bit of technical analysis on it. I tend to do it, from trying to gauge market sentiment, divergences, and everything else. But I just thought that was sort of an interesting thing to point out there, how you have this heavy level of resistance overhead and a inverted head and shoulders underneath. So I guess you could say that if it breaks through this 1472 level, that there might be an increased level of volatility enter into the market. Now, the reason why you have that, though, is looking at the S&P. Remember, it tends to go, the VIX tends to go up when the S&P goes down. So if you look at, let's look at the SPY, less crap on there. You kind of got the same thing, though, too, going with the SPY, where you have like this left shoulder, head, right shoulder, because it's inverted from the VIX. So you could say here that this 168.96 level, or 169, is going to correspond with what we see in the VIX as well. So those, they should be simultaneous confirmations. If one hits, the other one's probably going to be hitting at the same time as well. As for this market, though, while I think we probably are going to start heading lower, though, I'm trying to play this bounce here, because 5 straight days, possibly 6 straight days lower is significant, and it's significant enough to want to play this bounce for 20, 25 points higher. Maybe we only get 15 points, but nonetheless, it's enough to be able to profit off of this it's a profit opportunity. So with it being a profit opportunity, if we can ride that higher for 15, 20, 25 points and then start covering those positions, I'm only going to go 50% right now in this market in terms of exposure to the long side. I don't want to get all 100% long because I don't want to. It doesn't need to be a difficult thing for me to be able to get out of my positions and start flipping to the short side. Once we start getting back towards this, and I'll use the S&P since I'm better with doing strategy using the S&P, but we start getting back around the 1712, 1713 level. That'll be about 20 some odd points there, some resistance as well, and it's probably going to be a good opportunity to start putting in those new short positions along the way. And let's go ahead and look at the Nasdaq as well. I'll try to speed things up because I'm about 16 minutes into this, but Nasdaq, supported by the Apple, hasn't really sold off at all. Quite a divergence from the S&P, but you got a little bit of a break in this trend line off of the lows. But now the other side of the coin you could say is that you have a bullish flag that's working here. So this trend line that's been broken might not all be that bad of a thing because you have a bull flag that has been forming in the process, and the Nasdaq's up about 0.5%, and that could be like a confirmation of the bull flag, which could push it higher. But like I said, I think a lot of it has to do with Apple. Apple makes up about 20% of the Nasdaq. So if the Nasdaq is doing well, it's oftentimes because Apple is doing well, and as it has a heavy influence on its success. And with the iPhones thing, where they sold like 9 billion, or not 9 billion, was it 9 million phones, and they made like some $4.7 billion in the process. That's the news that's basically keeping QQQ from representing the same kind of price action that the S&P has of late. So we had one person ask about the Dow, not the Dow Jones, because I don't really care about the Dow Jones, but the Dow stock, DOW, and not bad. It kind of looks like to me that it has like a little bit of a rounding top thing going on here. If I can highlight it, there we go. This looks more like a little, maybe like short-term distribution that's going on in this stock here. It still does find support at this 20-day moving average, which is important because you can see here it has bounced off of it each time in the past. So 1, 2, 3 times now it has bounced off of it. But I would get short on if it broke that 20-day moving average, because it's also going to. Actually, I wouldn't short it at the 20-day moving average. I'd probably short it at 38. If it drops below 38.75, that's probably where I would want to get short on this stock. As far as getting long on it, I just don't see a clear edge on getting long on this stock. And I bet you, I don't know this for sure, but let's get rid of this. There we go. Looking at the 5-minute chart of this thing, I thought we might see a bit of a head and shoulders pattern, but we're not. But it just does. It still looks more like distribution here at the highs, though. It doesn't look like a bull flag or anything like that to me. So that's going to do it for today. If you guys have any questions, feel free to hit me up in the splash zone if you're a member, or you can just hit me at ryan@shareplanner.com, and I'll be glad to get back to your emails. Give me about 24 hours to do that. That's usually the timetable I give myself to get back to one of your emails. But ryan@shareplanner.com, or Twitter which is @shareplanner. And by the way, I got a book coming out October 28th called The Part-Time Trader, and it chronicles my time in corporate America, where I was a part-time trader and I managed to trade my way out of corporate America and start this fine website with you fine people, and become a full-time trader. I did that years back, and that's basically the essence of the book, and this trading strategies that I employed as a part-time trader, and how I got to where I am today. So be sure to get it. You can get it at Walmart.com, Amazon.com, BarnesandNoble.com, any website that sells books. I'm pretty sure they're going to have this one. So that's it for now. Y'all take care, and God bless.